You look at charts every day, marking levels, spotting patterns, waiting for price to react. And sometimes it works, the level holds, the move plays out, and it feels like you're starting to understand it. But then the same thing happens again. Same level, same pattern, and nothing. No reaction, no move. And now you're just sitting there wondering, how can I make money one time and then lose money the next time? What is price? You see, most traders never actually ask that question. They just assume they know. And because of that, they treat price action like this. Price taps into a fair value gap, so they anticipate it should continue. Price reaches an order block, so they think it should react. Price reaches resistance, so they think it should reverse. You base everything on the idea that what you see on the chart is what causes the next move. But that's not what's happening. Price action isn't something that makes price move. It's something that forms because price has already moved. And that distinction is something most traders never get the chance to understand. Price is behavior, not patterns, not levels, not signals. Behavior. What do I mean by price is behavior? Well, every movement in price comes from a decision being made in real time. People entering positions, people exiting positions, people reacting to what just happened. That interaction, that decision making is what creates movement. So, what you're actually looking at on the chart is just those decisions playing out in real time. That's what price really is. So when price reacts at support, it looks like the level was the cause of that move because that's where the reaction took place. But the support didn't make anything happen. That's just where the behavior changed. When price rockets after breaking structure, it's not the break of structure that causes the move. It's the change in behavior. And this is where it starts to go wrong because you see that happen. And then the next time you expect the same thing again. You see a continuation and you link it back to the level or the pattern or the structure as if that's what created the move. But it wasn't. You're looking at what formed and assuming that's what caused it. You see, this is where everything you've been taught starts to break down because this whole time you've been taught to understand price by looking at what's already happened. You study the move, the structure, the pattern, the level, but none of those things created it. They're just what it looked like after it happened. So, what you're actually doing is working backwards. You're looking at the effect and treating it like the cause. And once you do that, your entire understanding of the market is built on the wrong thing. The thing you're focusing on isn't what's actually moving the market. Price doesn't move because of patterns, and it's not the levels themselves making anything happen because those things can't do anything. They don't buy, they don't sell, they don't make decisions. People do. So it's not the level making the move happen. It's people making decisions, and that's what creates the move. The movement just happens to appear at that level. Once you see this, you won't look at the chart the same way anymore. You won't go back to analyzing structures and expecting them to influence outcomes. You'll never be able to treat patterns like they create movement. Instead, you'll look at price for what it actually is, not a system of signals, not a set of reactions, but behavior. Once you experience this shift, everything else you look at in the market starts to make more sense.